Good morning and welcome to today's webinar on starting and running a new business. On behalf of everyone here at Carriggs & Ingram, I want to thank you for taking time out of your busy schedules to attend today's webinar. First, let's cover a few housekeeping items. Everyone will remain muted during the duration of the webinar. However, if you have any questions, please feel free to enter those questions in the control panel, questions control panel that is, in the GoToWebinar software. Also, everyone attending today will receive a recorded copy of this webinar at the conclusion. That'll be emailed to you. Now let me introduce your tour guides on today's travel-themed webinar. My name is Chris Hoffman. I'm a partner in Nashville, Tennessee. I'm a graduate of the University of Tennessee and an avid follower of their football program. I have 2 Boston Terriers. I like to take my family, my wife and 2 sons, on an annual trip to Hilton Head Island every year. Another presenter is Sonia Mitchell. She's a partner in our Destin, Florida office. She's a graduate of Livingston University, which is now called University of West Alabama. She's married, has 1 son, as well as a tricolored King Charles Spaniel. Her household is an avid follower of SEC West football teams, including Bama, LSU, and Ole Miss. Her hobbies include playing the piano, as well as an avid wine enthusiast. An interesting travel fact is that Sonia loves boating in the Gulf of Mexico. She's also not only owned, but flown a Piper Cherokee airplane. Another presenter today is David White. He's a partner in our Tallahassee, Florida office. He's a graduate of Florida State University and is married with 1 daughter. His hobbies include binge watching Netflix and HBO, attending as many Florida State athletic events as he can, as well as running, biking, and hiking. Some cool travel facts about David is that he loves to travel anywhere with good beer and great food. He went to Denver, Colorado last year and is planning a trip to Iceland this year. Maybe in a future webinar, David can report back on the beer and food of Iceland. Now let's cover the agenda for today's webinar. We're going to get started with where your travels as a new business owner may take you. We'll cover obtaining credit and financing to fund and maintain your company. And next we'll cover things that you have to do in managing your business adventures. Things such as submitting the proper tax forms and conducting proper cash planning. Finally, we'll wrap up on embarking on the next steps of your business journey, including protecting and marketing your ideas. Before you sit back, relax, and enjoy the webinar, we're going to start with a quick polling question. This polling question will help us understand exactly where you are in your new business journey. At what stage are you in forming your new business? Have you considered starting a business but don't know where to start? Are you somewhere in between establishing the business and finalizing? Are you already in the final stages of forming the new business? Or is your new business already up and running? We're going to give everyone a few moments to respond and just cover those quick housekeeping items once again. Everyone's muted, but please feel free to enter any questions you have during the webinar in the questions panel of the software. And later today, everyone will receive a recorded version of this webinar, so you'll have something to refer back to in the future. So let's go ahead and see the results of the poll and see where everyone looks like we have a pretty even mix. A little over 1/3 have their business already up and running. 28% is just considering starting a business. 25% is still in the final stages of forming the business, and then the rest is somewhere in between. So now I'm going to hand it off to David, who will get us started with where a new business owner may begin their travels.
All right, thank you, Chris, and thank you to everyone who is attending this webinar as well. Just as Chris mentioned, but something I'd like to point out again, we're doing this for you. This webinar is for you, so please, if you have any questions, let us know and we can expand or go back to any subject that applies or interests you. We're going to start with some of the basics of booking a legal entity. Some of you might be further along than this, but for those of you who aren't, and also because it can't hurt to hear it again, let's talk about the basics of entity options. One of the first and most important steps of starting a business is to choose the legal entity under which your business will operate. Your entity structure determines your business's liability protection and tax liabilities. There are 5 basic business structures. The first on the list is sole proprietorship. A sole proprietorship consists of a single individual who operates an unincorporated trade or business. The owner has possession of all assets, bears full responsibility for all debts and liabilities, and reports the taxable income of the sole proprietorship on his or her individual income tax return, generally a Schedule C. So for certain activities with no or insignificant assets or liabilities or exposure, this might be okay. Nothing wrong with that. The next entity that we're going to talk about is a partnership. A partnership can take one of 2 different legal forms, general or limited. In a general partnership, 2 or more individuals run the business. A limited partnership, however, is comprised of at least one general partner who typically is personally liable for partnership debts, and at least one limited partner who contributes capital but does not participate in daily business operations and is typically not personally liable for business debts. Although a partnership files its own entity-level tax return, items of income, deductions, and credits are allocated and reported by the partners on their income tax returns. A partnership is referred to as a pass-through entity because of that. Something different that is not a pass-through entity is a C corporation. A C corporation is a business entity that carries its own legal status and is distinct from its owners. Think of all the publicly traded companies that you've heard of that operate and pay taxes independent of their owners. Apple, IBM, Google, etc. Control of the corporation is determined solely by stock ownership and is exercised through regular board of directors meetings and annual stockholder meetings. This entity files corporate income tax returns and pays income taxes at the corporate tax rates for federal and state taxes. The next entity that we're going to talk about is an S corporation. S, think small. In an S corporation, the entity's business income is taxed at the shareholder level, so it is also a pass-through entity. This entity requires an election, which requires the filing of a Form 2553, which is called an election by a small business corporation. There are restrictions on the number of S corporation shareholders who can be an S corporation shareholder, and each shareholder must consent to the election to become an S corporation. The last entity that we're going to talk about in terms of the basic entity options is an LLC, a limited liability company. An LLC is a business organization that generally protects its owners against individual liability for the company's debts and obligation, while also providing for tax treatment similar to that of a partnership. Assuming no special elections are made, an LLC with one member, so just one owner, is considered a disregarded entity and reports all of its income and expenses directly on the return of its owner. Also assuming no special elections are made, an LLC will file a partnership return if there are 2 or more owners, and all of the income and deductions will pass through to the owners of the LLC. Each of these structures has their own advantages and disadvantages, all of which are outlined in the Startup Business Guide that you'll receive. And to be honest, we could have an entire webinar just on this topic. Which entity will work best for you depends on many factors: the number of owners that you have, the industry that you're in, your plans for the future, such as raising capital and or being acquired as an exit strategy. So I'd highly recommend that you seek advice and counsel from a CRI advisor to discuss the nuances of these different entity options. We're next going to talk about some lower, maybe some items that are not as in your face and on your mind perhaps as the big questions of which entity are you going to be and whatnot. Some of these that we wanted to touch on that are equally important, however, relate to licenses, permits, and regulations. Many of these are going to be dependent on where you live, what city, what county, what state that you live in. So there are 2 different types of general permits that we want to talk about for new business owners. One is a certificate of occupancy, a CO. If you intend on building a new office building, then you will need a certificate of occupancy. Once you determine a permanent business location, you can obtain a certificate of occupancy from the proper business inspection division where you live. Similarly related is the city and county occupational licenses. These are required for business owners who offer and charge a fee for a service. So most businesses. You should contact your local municipality and county for further details. Special regulations and tax procedures may apply to your business or industry, so consult with your tax advisor as well. Thankfully, most of these can be found online. Next, we're going to talk about developing an effective business flight plan. This will not only be important for you to accumulate, ponder, and compile for yourself as the business owner, but also if you're trying to raise capital and acquire financing, which Sonia will discuss in the next section. Although there is no single formula for developing a thorough business plan, many successful plans have these 4 elements in common. Your company's statement of purpose, so what you do, why you do it, what niche that you fill. Your business data and information, such as your company description, marketing plan, and operating procedures. Your financial information, including loan applications, profit and loss statements, balance sheets, and supporting documents such as tax returns, personal financial statements, and resumes of all the principals and often advisors. When drafting your business plan, it's important for you to consider the products and services that your business provides and the needs that they address, who your prospective customers are and why they'll buy from you, how you plan to communicate with your prospective customers, and how you'll generate the financial resources to start and operate your business. Ultimately, an effective business plan is designed to assist in the achievement of your business objectives, the success of your company, to guide daily activities and decisions, and to aid third parties as they consider providing additional funding or credit lines. It should also help you identify your SWOT, your strengths, weaknesses, opportunities, and threats, and to foster a greater understanding of your potential customers and how to best meet their needs and expectations. Again, we could probably do an entire webinar on this topic as well, of developing your business plan and model. I'm personally a big fan of the lean startup model, which you've likely heard of, called the business model canvas, which we can talk about in greater detail offline at some point, or with any other CRI advisor. Next, we're going to talk about credit and financing, and Sonia is going to talk about that subject.
Thanks, David. Let's discuss those options you have for financing your new venture. When you're starting your new business, a lot of times there isn't a bucket of money available to cover the startup cost of your new business. There are several questions that you'll need to address as you raise money for your business. How much cash do you need? What will you do with the money? Equipment, delivery vehicles, inventory? What experience do you have in managing your business? Did you used to work for the competitor? Do you have a strong passion for this business? And what is the climate for your type of business and the geographical location? Is your business up and coming, or is it tried and true? Answering these questions is critical to your success in obtaining financing, as well as the overall success of the business. Few investors will want to put money into your business if you've not thoroughly researched and analyzed your company's chances of success. You've seen Shark Tank, right? After considering your company's financial needs, the next step is to decide how you want to raise money for your business. Business owners typically rely on debt financing, equity financing, or a combination of the two. Banks are a popular source of debt financing. They typically lend to small businesses on a secured basis using your equipment, inventory, real estate, or even accounts receivable as collateral for the loan. Loans take a wide variety of forms, including short-term demand notes and lines of credit that renew periodically. Lease financing is also a common means of obtaining debt financing. Leasing companies typically accept somewhat higher degree of credit risk because they look to the value of the equipment for collateral if your business can't make the agreed upon payments. For this reason, leasing companies generally prefer to finance new equipment of a general purpose nature, which then it can be resold if necessary. A very important source of debt financing for your company may be from the vendors and suppliers with whom you do business. Some suppliers may ask for cash on delivery or request payment before starting an order. However, in most cases, suppliers will quickly establish trade credit once they gain confidence in doing business with you. Equity financing usually means selling a portion of your business. This financing can be accomplished several ways, including the sale of common or preferred stock, stock warrants, or a partnership interest. Equity sales are usually carefully tailored to meet the needs of both the company and the investor. CRI can help get your business plan together, determine your cash needs, and help you walk through financing options that fit well with your circumstances.
Thanks, Sonia. I'll launch another polling question now. We're about to cover managing your business, and part of that process is using accounting software. So this polling question asks, what brand of accounting software do you currently use? Do you use QuickBooks or QuickBooks Online? Do you use one of the Sage products? Do you use Intact? Or how about Xero? And finally, do you not currently use any accounting software? While people have a moment to vote, there's a question I think, David, you may be able to help out with. What is the most common type of legal entity that you currently see new business owners selecting?
Sure, Chris. I'd be glad to help answer that. That's a great question, and to provide a typical accounting or CPA answer, it depends. It does genuinely depend, but in terms of the most common in terms of numbers, I would say it's probably, I'm here in Florida, so we see a lot of Florida LLCs. They are very versatile in terms of what you can do with an LLC. It's nice for someone who's starting out a company. It's nice to have for a solo owner, for a single owner that owns the entire LLC, the disregarded entity approach that the IRS takes is very appealing to a lot of business owners who don't really want to file separate corporate returns or partnership returns or anything. They like keeping it simple. What I also like about the LLC is, even if it's one owner or many, is you have the ability to kind of draw on a line in the sand, so to speak, and elect to be either a C corporation or an S corporation, both of which we talked about earlier, and both have their benefits that could be helpful to someone who wants to kind of level up their LLC from being treated under the default regulations and approach to be considered a corporation of some kind. So I would say that's probably not only the most common entity type, the LLC that is, but also one of the more versatile entities as well.
Thanks, David. Yeah, and I'll agree. We see the same thing up here in Tennessee. The LLC is a very, very common entity structure for new business. We're going to close the poll now and look at those results. Looks like we have two disparities. 46% either use QuickBooks or QuickBooks Online, very, very popular choice. The rest, 49%, currently do not use accounting software. So for those that don't have any accounting software, I will make a plug here that CRI probably has the solution that you need when you do adopt an accounting software. We use our real-time financial information as well as automated key predictive indicators to help you understand the impact of your financial decisions. So you may want to follow up with a CRI professional after the presentation for more information on which accounting software may be best for your new business. Now Sonia is going to discuss some of the major aspects of overseeing your new business.
That's all right, Chris. Thank you. While you may have a natural flair for operating in your business environment, managing your company's books may not always come so easily. Let's quickly learn about these 5 elements of a company's accounting system. It will give you a greater understanding of what bookkeeping may entail for your new company. The chart of accounts is the basic roadmap of any accounting system. It helps establish the information that your accounting system will capture and the information that will subsequently be readily retrievable. This tool, like the rest of the accounting system, needs to be dynamic and able to grow as the size and needs of your business change. Working with CRI will help determine which elements should be included in your chart of accounts. And next, the most common bases of accounting are the cash basis and the accrual basis. Under the cash basis, you record sales when you receive the money and account for expenses when you pay the bills. This method is much simpler than its counterpart. The accrual basis requires that you record receivables and payables when the transactions occur, even if you've not yet received the related invoice or payment. The best basis for your business depends on a variety of factors, such as tax regulations, your company size, and the industry norm. Next, regarding the internal controls, it comprises a system of checks and balances that help to ensure that your assets are properly safeguarded and that your financial information is accurate and reliable. As your company grows, maintaining your internal controls can become more challenging. However, at any given stage in your company's growth, you should be able to say that you have recorded and collected cash for all sales, received goods or services for any cash that your company expends, and appropriately segregated duties of various functions and roles. In any business, whether you are completely paperless or you stay better organized with physical file folders, it's an excellent idea for you to develop a record retention policy. When developing this policy, it's important to think about where you will keep your files, how secure the storage will be, and the environmental conditions under which you need to store these files. As we like to say, plan for the worst, such as a flood, a fire, tornado, or a hurricane, and then hope for the best. Our Startup Business Guide contains a suggested list of the types of documents to keep and the minimum amount of time for keeping them. And you'll also find this on our website at cricpa.com. As you answered that polling question regarding the accounting software, you realize there is a variety of accounting software available that helps you generate accounting information more quickly. Just remember that no software can automatically produce accurate, quality financial records. The software can only work with the data that a user inputs. So if you choose to use a computer-based accounting package in your business, it's imperative that you and your bookkeeper understand the substance and form of your business operations. Cash planning and forecasting is a critical part of starting a new company. While cash planning is effectively a series of educated guesses, using the most accurate numbers possible should produce the most precise picture of the future operations of your business. The first factor to consider in your cash planning efforts is your predicted sales volume. This number should be based upon objective data such as sales history of competitors or similar businesses. When thinking about your potential sales volume, be sure to account for the seasonality of your business, the relative state of the economy, and a period over which you forecast. There are a variety of matters to address when thinking about how much cash you intend to collect. For example, what percentage of sales are received in cash, and what portion are credit sales for which you'll have to carry accounts receivable? Once you're comfortable with the cash receipt side of your company, consider the expenses and other cash needs of your business operation. These include your salaries and wages, payroll taxes, overhead items, and vendor payments. Remember, the more effort you put into developing the cash flow projections, the more accurate they'll usually be. Now you've budgeted your cash for getting started, let's trek through tax compliance. Properly complying with the extensive tax and information filing requirements is a significant task for any new business owner. I highly recommend that you consult with a CRI tax professional, and we'll guide you through the one-time and the annual tasks that you should complete to remain tax compliant. The first of your one-time duties is obtaining a federal employer identification number. This number is required on all tax forms filed with the IRS. You obtain this number by filing the Form SS4, which you can complete online on the IRS website. If you file an income tax form without the ID number, then the IRS will assign one to you. You'll usually receive the ID number upon completion of the application. Even though the application may seem straightforward, unintentional choices can lead to headaches further down the road. If you've decided to operate your business as an S corporation, then you'll need to complete a Form 2553. That's an election by a small business corporation. When the IRS approves your completed Form 2553, you may file a Form 1120-S. That's the U.S. income tax return for an S corporation. It's important to note that the Form 2553 must be filed within 75 days of establishing your business. There are certain revenue elections that CRI can request if you're past that 70-day mark. The year-end selection may vary depending on the entity structure. For example, sole proprietorships, S corporations, and partnerships are typically required to use a calendar year-end. But by contrast, a C corporation can generally elect a fiscal year with few restrictions. No matter which form of legal entity or year-end you select, you will be subject to federal and possibly state income taxes every year. Given the number and occasional complexity of tax laws, it is best to partner with CRI to ensure that you file all the relevant tax forms, as well as understand the regulations for each state in which you do business. The Startup Business Guide has a list of the most common federal tax forms and their due dates. Yes, extensions are available at both the federal and state levels. Keep in mind, though, that these extensions do not extend the time for paying the actual tax liability. Okay, you have an idea about federal state income tax filing requirements. Let's fly over payroll taxes and sales taxes for the next leg of our journey. No matter the form of business you operate, you'll most likely have people who work for you. Therefore, the following key considerations will be important as you think about paying your team members. The primary difference between employees and independent contractors is the degree of control that you, the business owner, have over their schedules. Employees work for you on a consistent basis, so you direct their schedules and workloads. But by contrast, an independent contractor chooses his or her own hours and can refuse work that you assign. Each employee should complete Form W-4 so that you know the amount to withhold from his or her wages. If you hire an independent contractor, he would complete Form W-9 and receive a 1099 form from you at year end. The contractor pays all of their own taxes. But as an employer, you are required to make deposits for all withheld federal income tax, Social Security tax, and Medicare tax, and sometimes unemployment taxes, depending on state requirements. Your tax deposits will be made on one of two schedules, a semi-weekly or monthly. The IRS generally notifies all employers each November of the reporting schedule with which they must comply. Employers should make tax deposits through the electronic federal tax payment system, and you can enroll in this system online. When you receive your IRS letter with your new identification number, you'll also receive a brochure at that time on using the tax payment system. In addition to making monthly or semi-weekly tax deposits, employers are required to submit federal and state payroll tax reports on a quarterly basis. The Startup Business Guide includes a list of and deadlines for the different federal reports. As with income taxes, payroll tax regulations also vary by state, so it is important to know the requirements for each state in which you do business. Your local CRI CPA will know these requirements and can help you get organized in paying and filing all of your taxes. Sales and use taxes are some of the most complicated and often incorrectly calculated taxes at the state, county, and city levels. Sales tax is charged for nearly all transactions. Use tax is a component of state sales taxes and may be due if you make purchases out of state. For example, if you purchase a product without paying a sales tax and that product is subject to sales tax by law, then the end user is ultimately responsible for paying the tax required to use that product. Although completing sales and use tax forms may seem simple, getting a handle on the jurisdictions where you have a filing need may require CRI's professional assistance. So further into your business journey, you might be considering a buy-sell agreement. A buy-sell agreement is a binding agreement executed between co-owners of a business to govern the outcome resulting from a co-owner leaving the business. It impacts who can buy the departing co-owner shares, when they can be bought, and what they will cost. An insured buy-sell agreement is often recommended to ensure the funds are available to execute the buy-sell agreement. Buy-sell agreements can take many forms and cover many variables, so we do recommend that you seek professional advice throughout this planning process, as well as during any transaction. Now, business insurance is one of the most important aspects of your company's long-term survival. Although very few types of insurance coverage are mandatory, there are some types of coverage that we highly recommend that you consider. Business interruption covers the loss of revenues your business would sustain if you were forced to shut down for reasons beyond your control. It is a valuable option, and you should carefully consider the policy premium relative to the potential profits your business might lose during a short shutdown of operations. Employee fidelity bond is a type of insurance protection that it typically covers the risk of loss from employee theft. If your business handles large amount of cash, negotiable securities, or works in a customer's home, then you may well be advised to consider this coverage. In certain industries, regulatory authorities may require employers to carry this type of insurance. Umbrella coverage covers losses above and beyond the limits of other policies. This coverage usually pertains to various sorts of liability, and it's valuable if you or your business has a net worth that requires protection in the event of a catastrophic loss. Key person life insurance will be required if the sudden loss of a key executive will have a substantially negative effect on the company's operations. Now, with disability buyout insurance, if a co-owner of a company becomes disabled, then the policy can provide the funding to buy out the disabled owner's share of the business at an agreed-upon price to provide a beneficial solution for all the parties. Short-term disability insurance pays a percentage of your salary if you become temporarily disabled. And long-term disability insurance, that coverage starts once your short-term disability benefits expire. Just as with any other purchase, consult with a variety of insurance brokers, as well as CRI before buying coverage. Chris, it looks like we might have another polling question coming up.
Yes, thanks, Sonia. Before we discuss our next step, we're going to take our final polling question to gauge where you may need assistance in running your business. With this one, you can check any that apply. Where could you use some additional help managing? Is it your accounts payable and accounts receivable as well as the billing aspect? Is it just the general bookkeeping? Is it financial statement preparation? Or is it some tax compliance such as sales and use tax, Form 1099? Or lastly, is it payroll related, managing payroll and payroll taxes? Or give people a minute to vote. Sonia, I've got a question from Brian that I think you may be able to help with. He wanted to know whether we've heard of the accounting software Wave or FreshBooks. Have you had any of your clients use either of those software packages? No, Sonia?
No, I have not. A lot of our clients do have some particular softwares that work in their specific industry.
Yeah, I haven't used either one of those software packages either, but
Chris?
Yes, David.
Yeah, I've actually had clients use, not the same client, but I've had clients that use Wave and some that have used FreshBooks. And both Wave and FreshBooks, for those that aren't familiar with them, that they are like Xero and QuickBooks Online. They are cloud-based accounting softwares that work best by automation and kind of data downloads that you connect to your bank feeds and credit cards and whatnot. And they are both fine cloud-based accounting software. So I typically will encourage people in settings like this to look at all of them and just kind of see which one fits best.
Okay, thanks, David. Let's go ahead and take a look at those poll results. It's like here we've got the two biggest needs out there are bookkeeping at 29%, as well as filing sales and use tax returns, Form 1099 and other returns, which I think dovetails exactly into what Sonia was mentioning as one of the most, misunderstood tax types. The next one is the financial statement preparation had 18%, and then we had an even split between accounts payable, receivable, and payroll taxes, each at 12%. So now David's going to introduce us to the next step of our journey.
Sure, thanks, Chris. So this is kind of the final section. So what happens on this next step of your business journey as a new business owner? If everything goes as planned, or even as you haven't planned, given that I think the mix of everyone that's listening is people that have started their own companies, people that are thinking of starting their own companies, and some that are still in that development process. But if everything goes as you've planned, you're only going to get busier and busier and busier. So where you devote your time and energy will become even more valuable than before. So it's important to know you're not in this alone. In developing a bench of resources, or maybe to keep with the flight theme, air traffic control of resources is immensely beneficial. Business owners such as yourself already face many decisions and tasks that may often seem overwhelming and with lots of risk. So asking for support and assistance is understandable and recommended. One of the most cost-effective tools you can use is a client accounting services team, which is something that CRI happens to excel at, and which is some of the topics that Sonia talked about. Client accounting services are tailored to your needs, whether it's a team of just you or yourself and your staff. And these have a common method of improving operational efficiencies. Our client accounting services team can perform a wide variety of functions, from training your new employees to serving as your CFO or controller or bookkeeper. No matter what your needs may be, CRI is prepared to help you align your resources so that you pay only for the specific, high-level expertise that you need. How we do that also is kind of along the lines of what I was just talking about when it comes to automation and cloud-based technologies. Is anything that can be streamlined or automated or done electronically? Is. So that your valuable time and energy and money, which are all, it's like the trifecta of business resources, those are all valuable, so that they are all used most efficiently. Something that we're also going to talk about is kind of the basics of protecting your suitcase of ideas. Ideas are relatively easy, but it takes knowledge, time, money, and effort to refine an idea into a workable invention or solution. Turning a product into a profitable business could require a patent, trademark, copyright, or a combination of all three. This is especially true if you were in the innovation business. So not just starting a new replicable business with products and goods, but maybe you're in the technology or innovation business. So let's discuss the basics of these three. A patent is a grant of property right to the inventor issued by the U.S. Patent and Trademark Office. Patent holders can prevent others from making, using, selling the invention described in the patent deed. A patent serves to give the developer of a new product time to recover research, development, and startup costs without fighting competition. A trademark includes any word, name, symbol, device, or any combination of these that distinguishes the goods of one manufacturer or seller and indicates the source of the goods. A brand name is an example of a trademark. A copyright protects original works of authorship, such as poetry, novels, songs, and movies. A copyright does not protect facts, ideas, systems, or operating procedures. If you have a registered copyright, then you can block the unauthorized copying or public performance of a work protected by the copyright. Working with an intellectual property specialist will help you decide which of these vehicles is best for you. However, keep this in mind. You never hear of anyone who has any type of IP tell a story that starts with, boy, that IP process of developing, applying, and getting approval of the patent, that sure was quick. No, these things take time, so please start early, seek out advice and counsel, and stay the course. This can especially be critical if you're going to be seeking financing or raising capital, such as what Sonia talked about earlier. Lastly, I want to talk about developing or taking off with your marketing strategy. This is your vision. Creating a marketing strategy offers your business a competitive advantage in the marketplace. A marketing strategy is essentially a foundation that integrates your organization's major goals, policies, and action sequences. Marketing strategies are generally concerned with product, pricing, promotional, and placement, the 4 Ps. So not just what you do, but how you frame it, how you sell it. Because your customers' needs and business environment are constantly changing, your marketing strategy should evolve as well to consider new trends, opportunities, and threats. Marketing strategy will also help you identify new markets that you can successfully target.
Thanks, David. Hopefully from this webinar, you've learned that when it comes to starting a business, you don't want to fly solo. We hope you choose CRI as your travel companion as you take off on the route to success. On that route, we encourage you to visit smallbizconsulting.com, the website listed here, and complete the online form for a free 30-minute startup business consultation. During that consultation, a CRI professional can help you along with your journey and explain what services we can provide. At our first polling question, we asked, what stage are you in forming your new business? We had people attending who were at various stages. Some were still forming a new business, some had formed it but were still in between stages, and some had already formed and started their new business. But they may also need help managing records or outsourcing their accounting process. So through the smallbizconsulting.com, you can get a free consultation on how we can help you further along in your new business. Now, no matter what you need to help your new business take flight, CRI is here to help. Our practical, robust solutions are designed to help you maximize efficiencies and reduce your workload. Additionally, we strive to help you adapt quickly to any regulatory, technological, or economic changes that could impact you. But most of all, we deliver our services through partners in your community. In addition to getting a copy of today's recorded webinar, we'll also be sending you our white paper on startup business planning, which both David and Sonia have mentioned throughout the presentation. This white paper will cover all different tips and insight on things you may encounter and go into a little bit more in depth on some of the things we've discussed today. You also find more information on our website, cricpa.com/trends/startup business planning. Again, the website listed on the right-hand side of the slide here. We hope you partner with CRI to help your business take flight. We've got a few minutes left to take a couple of questions. So one question came in from Blaine, which I think is an excellent question, on starting out a new business. How can one best plan ahead by earmarking income for estimated tax purposes? I'll take a first shot at this, and then I'll open it up to Sonia or David on what they recommend to their clients. Typically, when I meet with a new business client, what I tell them to do is set aside about 30% of their net income for taxes. Because what I've seen sometimes is a new business owner will either pull cash out for their own personal needs or reinvest all their cash back into the startup business and then when it comes to tax time, they don't have that cash available to pay the taxes. So again, my off-the-cuff recommendation for them is to just set aside 30%. Sonia, do you have any guidance there on what you tell clients on how to best plan for their income tax needs?
Chris, that's a great suggestion. I do the same thing. I even recommend that the business set up a separate account, and we kind of call that our catch-all account to pay taxes later on, and also it helps to get through those seasonal downward turns that can occur. So when you're in an upward market and you're having a lot of cash, it's best to pull out that excess, at least 30% like you recommended, no less than 20%, and that way you've got that cash set aside that you won't use, and then it's ready for you when the time comes. Thanks,
Sonia. David, I've got a question that has come in that I think you may be able to add some insight to. In comparing income taxes, payroll taxes, and sales or use tax compliance burdens, which tax type do you see as the most difficult for a new business owner?
Sure, that's a great question. I would say, just to maybe kind of bridge the two questions that we just heard, I would say it's probably a combination between sales tax and income tax. I kind of think payroll tax, the market has thankfully been innovative enough to where there's a lot of efficiencies that have been developed where payroll companies or extensions of accounting software platforms help allow for payroll tax compliance a lot more than it used to be, where that would, maybe if you would have asked me that 5 years ago, I would have said with, you know, the leader, far and away leader would be the payroll tax compliance, the payroll tax issues being the most burdensome. But now I think just given some of the innovations made in that area, I think it's probably a combination of, for new businesses, the income tax question and also sales tax. Income tax, kind of relating to the answers that you just provided, it's not uncommon for me to be meeting with a new client where, unlike the people on this call, it seems, you know, they are seeking advice and counsel maybe after the year has already closed. And so they might have already made a healthy net income for the year, but they might have already spent that cash since the year has closed. So in those situations, especially if they are dealing with self-employment taxes, which is ironically kind of a combination of income and payroll taxes, it can really put them in a position where they have to try to devote some attention and cash to be able to kind of catch up in terms of any tax obligations that are due, and also getting set on a good planning foundation of withholding, as you mentioned, 30% or so of net income to set aside for income taxes. It's much easier to be pleasantly surprised that you don't owe as much in taxes that you had budgeted for than to try to find cash in the couch cushions to be able to pay any tax bill that's due. I will also say, just to kind of qualify some of the other points that we had made, that net income is true, that paying tax on that net income of, let's say, 30% of net income, that's true whether you leave the money in the bank or not. I've had a surprising number of people that have kind of thought that if they are a single member LLC or even an S corporation or partnership, that if they leave the money in the bank, if they don't personally benefit from it, if they don't take out a draw or a salary payment, that they will not have to pay taxes on it. The answer is no. If you're outside of a corporation, to some degree, if you are the owner of the business and the business makes money, you're going to have to, as the owner of the business, kind of think through how you want to manage tax compliance.
Thanks, David. Well said. Got one more question for you, Sonia. When a new business is going to obtain financing, do you typically see banks asking for personal guarantees?
Yes, I do, especially with a partnership or any type of entity. Really, there's a need for an individual to guarantee that loan.
Yeah, thank you, Sonia. Yeah, we see that quite frequently there. And also, obviously, David covered the liability protection of the various entity types. So those personal guarantees to banks, typically, yeah, if you form a legal entity thinking you're free and clear from the liabilities of the company, but then they end up signing a personal guarantee with the bank, it may disrupt that liability protection. One last question came in. I think we have a time to squeeze it in. Laura has asked, is there any advantage to using your own personal money for a startup business versus going out and getting a loan? Sonia, do you want to handle that one?
Well, there's, with borrowing money, you certainly have usually an interest amount that you have to pay back on that money. And if you use your own money, then you're in more control. So it just depends on what type of business and how much cash you need. And it's best to come up with a business plan and determine what that cash is. And sometimes you may want to hold on to your cash and borrow the money. And it just depends on your situation and that type of business.
Thanks, Sonia, and I hope that helps, Laura. If not, please, during your free 30-minute consultation, your CRI professional can go into a little bit more of your specific situation. We can go ahead and wrap up today's webinar. I do want to thank you for your time today. And if you'd like any more information on the services that we can offer to startup business owners, please feel free to request that 30-minute consultation or visit our website, cricpa.com. So once again, thank you, and hope everyone has a great day.